So the FOMC meeting has just released, the statement have just published, and also the Fed just cut 25 basis point in today's meeting. So guys, well, what will happen to the market after this? Well, let's discuss in this video. But before we go to the chart, as usual, I'm Alex, your technical analyst from FundYourFX, and let's go straight to the chart. Okay, first let's start from the summary of economic projection. We see here, this is for median on 2025. We see right here, June projection for the GDP, it's 1.4%. But change in real GDP, it's 1.6%. So we are seeing there's an increase of 0.2% in the GDP. And for unemployment rate, we have, well, the data show unchanged, 4.5% on the unemployment rate. And for the PCE inflation, the projection still the same on 3.0%. Unemployment stays the same, 4.5%. For the core PCE inflation, June projection, it came at around 3.1%, and well, projection now it's on 3.1%, so it was unchanged. So that this is good. Okay, so the data is still unchanged. There is no, well, revision on this. But for the federal fund rate, we have changed in here. June projection. Okay, wait, let me check it out. Can I draw it here? Yep, I can draw it here. Here we have changed right here from 3.9% to 3.6% in 2025. So they're highlighting that the Fed is going to cut rate 2 times after this, of course. But the market show here, when we see the market right here, the DXY, the first move of the DXY, it's on the downward momentum, but the price went back directly to the upside momentum and created some sort of hammer candle. Okay, so I don't think that there is enough or more information about this. Okay, by the way, if you see right here, so most of the board member of the Fed, it's, well, at least it was unchanged for the rest 2025, or there will be a change of, well, only one rate cut. But we see here, we see a rate hike, and we see a massive rate cut. This is quite weird because we see the data right here. The data show great, well, group right here. Data show great group. It's grouping on the data, but it was very diversified. Okay, so for the 2025, the Fed will likely to see and keep an eye for in the unemployment rate, GDP, PPI, PCE, CPI, and then eventually he will likely to see for the non-farm payroll. So for the rest of 2025, after September, you have to see and you have to keep an eye for this kind of data. The first one, non-farm payroll. The second one is unemployment rate. The third one, you have to see on the let's say CPI, okay, CPI, PPI, and then PCE. But if you doesn't want to keep an eye for in this so many data, you only have to look for the non-farm payroll, unemployment, PPI, and CPI. Just enough. That's for data. It's enough for you. So that the Fed board is going to basically cut rates or holding its rates based on the non-farm payroll, well, basically the job market or the inflation data. Okay, so, well, the Fed still is going to be on the wait and see scenario, and 3.6% right here, it's not the actual that the Fed is going to, well, the projection is going to 3.6% in the end of 2025. No, it was a projection, and the projection it can be shift to maybe, well, to only 4%, or maybe it can be getting worse, 3.5% or maybe 3% if the job market is going to be on the deficit side. Okay, so well, that's pretty much it for the data. I hope it explained to you very nicely. So 3.6, remember guys, 3.6% for the federal rate, fund rate, sorry, for the median on 2025 is just the projection. It's not the actual data that the Fed is going to cut rate to the 3.6% mark in 2025. Okay, well, let's check out here on the DXY. We see right here the first potential move on DXY. It's the downward momentum, of course, but it close to the positive rate climb. Okay, so the price right here makes the almost hammer like. Okay, so let's say it was hammer because we see there is a massive or very long wick, and then the body is near the top, so let's call it a hammer. Okay, so it's like a hammer. And then what really happened here, because the Fed is cutting rates and the market on DXY, it should be reflected by the DXY. It's going to reach another low, but not this time. We see right here that the DXY on the forward chart, rather than it makes another low, but it makes a false break on the support on the daily, which is right here. This is the false break, see here, and right now it's show rejection on the forward chart. There is high likely that the price will continue to the upside momentum until it visits the supply zone. So where is the supply zone for now? The supply zone for now is, look here, it's right around here, see here. So the potential movement for the DXY on forward chart is going to continue or make a correction or make a pullback near the supply zone, which is right here, and there is a second one which is right here. Which one is the most strongest? So the most strongest is this one, small one. Why? Because it was confluence with prior support right here, so it will become resistant, become support. Okay, so well, this is for the DXY. So DXY will likely to continue its corrective movement or pullback to the nearest demand, which is at around here. And then let's check out the Bitcoin. Let's go check for Bitcoin. Okay, oops, let's check out Bitcoin. Okay, Bitcoin have moved near the, oh, well, not near, the Bitcoin already moved or already positioned itself in the supply zone. But we see right here the price, when there's a rejection on the supply zone, the price seems like to continue retesting this zone. So this zone is on the daily. Okay, this is very strong daily zone right here. And we are going to see that the price right here on the daily already made a bearish harami candle, or inside bar if you use bar. If you use the candlestick pattern, it's called the harami candle. And for now, we only have to wait and see, because if you want to short them, it's not a great time because we doesn't have the boss already on here. And if you want to take a long position, it's quite well, it's quite dangerous because the price already entered supply zone, and there is high likely that the bearish momentum is high right now rather than the bullish momentum. So all we can do is, well, wait and see for the Bitcoin. But if you already buy in the lows, maybe let's say 110,000, you can partially take profit, or well, maybe leave it alone, leave your position alone on Bitcoin, so that if you see another potential that on the Bitcoin itself it's going to continue lower, you can start cut the profit there. That's pretty simple. That's pretty simple setup for the Bitcoin. And then let's check out another one, which is gold. Let's check out gold. Okay, sorry. Wrong liquidity provider. Let's check out the Saxo. Okay, on the forward chart, guys, the forward chart, gold still it doesn't move very much like on the Bitcoin. Okay, and this is a new high. This is a new high for gold, but I don't think so. It was a new all-time high. Yep, it was another all-time high. Wow, what period that we are living right now. Gold makes another historic all-time high. So it was the high point right here, and they're highlighting the potential market movement or price movement for now for the gold is to catch the demand zone or demand area. The first demand area, which came at around here. Okay, and the price already entered here, and the second one is right here. Okay, let's see if there is a kind of some sort of divergence. Let's see here. Nope, there is no divergence. Wait. Here. There is a divergence, by the way. You see here, and you see right here. Okay. Okay, that should be good. See, the price makes another high, or the price makes higher peak, but on the stochastic itself, it creates a lower peak. So it was divergent, and this is the divergence that can make the price might be reversed to the bearish side until the price touch the supply zone or potential support area. So well, that's pretty much it for the gold. Let's check out the euro dollar. Okay, let's check out euro dollar. Oh, before we go to the euro dollar, let's check out the stock market. Okay, first let's start from the S&P 500. We see right here S&P 500 doesn't move much, but its initial movement is on the downward momentum. It's shaking up its position. So on the daily chart, we see that it still have the potential that the price on the S&P 500 is going to continue in the corrective movement, because it was very overbought in this zone. You can see right here on the stochastic, even the stochastic moved in the overbought position or overbought area. So it is the great time for now for the S&P 500 to continue its corrective movement. Nasdaq, let's see what happened to Nasdaq. Whoa, let's see here. Okay, Nasdaq on the daily chart have been made the valid swing high, and there is high likely potential that the Nasdaq will likely to come or to continue its corrective movement. When should it stop? I see right here, this is plenty of demand, or if you want to see the smaller one, you can see here, this is the nicest demand zone. Okay, as long as the price not breaking this support, which is at around, let me check, $22,673. Okay, so there is high likely that the Nasdaq is going to continue on the bullish momentum. But if the price breaks this support, there is a chance that the Nasdaq will make a bearish momentum or bearish structure. Okay, let's check out the euro dollar. What will happen to the euro dollar? Let's check out on the forward chart. The euro dollar initial move, the euro dollar on the upside momentum, because the DXY move in the bearish momentum on the first when the data is going to be released. It's getting released. And for now, well, the price failed to maintain its bullish momentum on the forward chart, and I see right here the price will likely to continue its corrective movement, its pullback to the nearest supply, the nearest demand zone, which is right here, right around here. See, 1 and 2, this one. So if you want to take a long position on Euro, USD or the Euro dollar, you can wait until the price show validation of rejection on the demand zone. That should be pretty good, guys, and that pretty much it for today, and I hope you enjoy today's video. I hope you get explanation for the both FOMC statement, FOMC meeting. So don't forget to like, comment and share this video, guys, and don't forget to subscribe to our YouTube channel, and also don't forget to follow our X, TikTok and Instagram so you can get notified if I make this kind of video. Guys, thank you so much for watching, and I'll see you again in the next video. Bye bye.